want to start out today by wishing everyone a very happy new year. Hope that 2021 is starting out absolutely fantastic for you. Hi, this is Andrew with the Andrew Smith team of eXp Realty, and we made it. Here we are in 2021. And we're just about in mid-January, which means it's time for my monthly real estate market update. So for this month, what I thought I was going to do for you is we're going to take a quick look back at 2020, kind of assess what happened in the year there from a real estate perspective. And then we'll move into 2021, kind of with an update on what's going on in the market right now and what we should expect going forward. So I think it's pretty safe to say in all areas of life that if we went back a year and looked at what we were thinking of for 2020, the year didn't exactly go as planned. But then again, things seldom do. So with that in mind, real estate was kind of a bright spot. It was an interesting time in the real estate markets in 2020 because there was an awful lot of speculation and opinions as to what was going to happen. And what I mean by that is we started the year extremely strong. We've talked about that in prior videos. Everything was just humming right along, and it looked as though it was going to be an extremely busy spring and summer season. And then boom, the pandemic hit, and everything kind of shut down. And there was a lot of information coming out, or a lot of speculation, I should say. It wasn't really information, it was speculation and opinion. Oh my gosh, the real estate market's going to crash. This is going to be worse than 2008. We're going to be hit with a tsunami of foreclosures. This is going to happen. That is going to happen. And to be honest with you, speculation is all it was. It wasn't based on any fact whatsoever. And in these monthly market updates, am I claiming to have all the information? No, I'm absolutely not claiming that. But what I am doing is looking at the actual data, looking at the facts from a variety of sources as it comes out, and then relaying it to you so that you can make the best decision for your specific situation. So let's start. I mean, the pandemic hit, and the first thing that happened is unemployment soared. And as unemployment soared, the economy quickly went into a recession. And the feeling was that, oh my gosh, this is horrible. The real estate market's done. And there was a connecting of the dots between recession and housing crisis. And back in March, the monthly update I did back then said, wait a minute, real estate recessions don't necessarily mean bad news for the real estate market. This is not 2008. Things are extremely different. And in fact, this was the slide that was put out. And it actually showed that home prices during 3 of the previous 5 recessions had actually gone up. The problem was 2008 was the most recent. It was also the most severe. So it was what people had on their minds. It's what everyone's attention was drawn to. So that was the natural conclusion. Well, now that 2020 is finished, here's what actually happened. So as you can see here, prices on a national average actually went up 7.3% nationally. Different in the different markets. As a matter of fact, here in Frisco, Texas, the median home price actually went up 18.1% year over year. And in Prosper, it went up just about 11% year over year. So well ahead of the national average. So as you can see here, in the last 6 recessions, home prices have actually gone up in 4 of them. And again, very different than 2008, because in 2008, it was an actual housing crisis that actually led to the recession. This time it was a pandemic, so it was a health crisis, not a housing crisis. But going back, honestly, a lot of changes just in the way we live as a result of 2020. Working from home, schooling from home, all of those have had a huge impact in the real estate markets. But the story of 2020 with regards to housing, I could argue, is really equity. The growth in equity that the vast majority of homeowners experienced, I mean, it's a staggering amount of growth. So, as Frank Notheft says here, he's the chief economist at CoreLogic. Over the past year, strong home price growth has created a record level of home equity for homeowners. The average family with a home mortgage loan had $194,000 in equity as of the third quarter. This provides an important buffer to protect families if they experience financial difficulties and is one of the reasons for the generational low in foreclosure rates. So that's interesting right there because, as I touched on in the beginning, one of the opinions was that we were in for a wave of foreclosures, an absolutely tsunami of foreclosures that would equal what we saw in 2008. And we've been saying, no, that it's not like that. It's not like that at all. And home equity is one of the major reasons why. There is so much equity that has been built up in homes over the past decade that equity gives people options. If someone's in trouble, they don't necessarily have to walk away and give the house back to the bank. The equity means that they could sell and move on. The interesting thing is now is that equity appreciation rate isn't expected to change in the near future. So here's the latest forecast here. And this is looking at the fact of, let's say you bought a house today for $300,000. Okay, again, these are national averages, so they're going to be different in each and every market. But by 2026, it's estimated that you will have built up over $54,000 in equity. So that equity growth that we've seen over the past decade is not expected to go away over the next 5 years. The pace of appreciation could change, which we'll touch on in just a little bit, but it still looks as though we're going to have tremendous equity growth. So again, looking at anyone that's been in the market to buy in the last 6 to 8 months, they will tell you it's been extremely difficult. There is very few homes for sale. And for anyone that's looking to sell, based on the fact that there's so few homes for sale, why put your house up for sale if there's going to be nothing to move to? So you've kind of got a catch-22 going on here. And I do expect that will change, but we'll have to see exactly when. So with all that in mind, what does it look like 2021 is going to bring? Well, to be honest with you, with where we are right now, it doesn't look as though there's going to be much change in the near future from what we experienced in the second half of 2020. Now, there are other factors at play, namely the pandemic and the economy. So what's going to happen with the pandemic? How is that going to be tamed as the vaccine rolls out and as we get a better grip on it? Obviously, treatment options are getting better and have gotten better, but in order for us to return to any sort of normality as we know it, we're going to need to get control of that pandemic. So we'll have to see how that plays out over the next few months. Likely, also it's going to depend on the economy. What is going to happen with regards to the economy? And we don't know, to be honest. We don't know what the change in administration is going to bring, what the new economic policies coming in is going to do. What is expected from most of the forecasts is that not a whole lot is going to change in the near term. And when we look specifically to housing, as I mentioned earlier, the big surge in work from home has made a dramatic impact. And that was touched on recently by David Mealy, the president of Homes.com. He said the surge in work from home population has rewritten the playbook for many home buying and rental decisions, from when and where to relocate to what people are looking for in their next residence. So what we basically saw is that as people were working from home and as it became apparent that wasn't just a short-term thing, that was actually going to be with us well into the future, if not permanently, is that people were finding that their current household didn't work. They didn't have the right setup. They didn't have the right rooms. And since they weren't going out for entertainment as much, a larger emphasis in having a bigger backyard, a pool, outdoor kitchens, things like that for the kids to play or whatever it may be, became of more importance to more families, which put more pressure on the real estate markets. And we saw supply dwindle substantially. In both Frisco and Prosper, we actually have less than a 1 month supply right now. Keep in mind that somewhere between 6 and 7 months worth of supply is considered balanced. So supply is very short. And builder confidence, though, remains very high. And that's important because it means the new builders are going to continue building. But as Mark Fleming, the chief economist at First American, says, despite the best intentions of home builders to provide more housing supply, the big short in housing supply will continue into 2021 and likely keep house price appreciation flying high. So, in essence, what they're all saying is more of the same, right? So nothing really there is changing. I do expect personally that supply will increase and will improve, but it's probably not going to be until the second half of the year. So we're going to all have to work together and wade our way through the next few months, especially if you're planning to sell or planning to buy, in how exactly you navigate that. We've been helping a bunch of clients with those decisions ourselves recently. And if you've got questions, reach out. We'll be happy to talk through your specific situation and see what we can come up with as far as a plan for you. And, lastly, on the economy, as I mentioned, not only, we've got supply and demand, but you've also got unemployment, because unemployment is the big factor that led many to believe that there were going to be this wave of foreclosures. Am I saying there's going to be no foreclosures? No, I'm not saying that. There will be an uptick. Is it going to be enough to dramatically impact the real estate market? Not from what we're seeing right now. Again, as I just mentioned, supply is so low, any increase in new listings that comes onto the market is likely to get sucked up very, very rapidly by buyers. And in addition, that's probably going to continue as unemployment continues to fall. Granted, we don't know what's going to happen exactly with the economy, but the latest projections with regards to unemployment are right here. In blue, we've got the Wall Street Journal Economist Survey, and in green, we've got the Fed projections. As you can see, the Fed is actually projecting that unemployment will fall a little bit faster than the Wall Street Journal survey is. So for right now, I'm going to say more of the same. That's what we're going to expect, at least initially. I think prices are going to continue going up. But one thing to keep an eye on is that the Fed has been very active in the secondary mortgage markets. So we've actually got a situation going right now where since the election, Treasury rates have gone up, yet the mortgage rate has continued to fall. That's inverse. That's not the way that relationship usually works. Usually as the treasuries start to go up, you see mortgage rates start to go up as well. I expect that is exactly what we will see as the Fed pulls back in the secondary mortgage market. And we're going to see some of that change, and it will impact mortgage rates. Not a lot. I mean, they're still forecasting by the end of 2021 rates to be around 3.1%. Yes, that's higher than today, but historically, that is still such a phenomenally good rate. It shouldn't really have any impact whatsoever on people looking to buy, although it will more than likely slow that pace of appreciation down a little bit, as we can't continue at the pace we've been. That will become unsustainable and will greatly impact affordability. So stay tuned. I'll have another update out in February. We do these each and every month to kind of keep you updated on what's going on. If you want to be notified whenever I put new real estate market updates out, or from week to week, I put a lot of general tips and tricks out, go ahead, subscribe to the channel, like this video. I would greatly appreciate it. And if you have any questions whatsoever, again, contact information is directly below. Please feel free to reach out, and I'm happy to help however I can.